Hello and welcome to the AUSTRAC Reporting Entity Forum. My name is Nikki and I'm a specialist in the Industry Education and Outreach team here at AUSTRAC. Joining me today is Hayley, Emma and Isabella, who are also from Industry Education and Outreach. I'd like to begin today by representing AUSTRAC in acknowledging the traditional custodians of country throughout Australia and their continuing connection to land, sea and community. We pay our respects to elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. Thank you for taking the time in joining us. The purpose of this forum is to help you improve your AML-CTF compliance by providing sector-specific insights, addressing common challenges, and offering practical guidance. Before we begin, we do have a few housekeeping items to address. While this webinar is designed to highlight some key regulatory insights that may be relevant to your business, it does not constitute legal advice. Should you need to do so, we encourage you to obtain your own independent professional advice specific to your business and individual needs. This webinar should not replace or form part of your staff AML-CTF risk awareness training program. And finally, while we will be providing a brief update on the upcoming reforms, please keep in mind that this is not the focus of today's webinar. The AML-CTF rules and associated guidance are still in development, and AUSTRAC will provide education on this as details become available. In today's session, we will explore several topics, including a brief update on the upcoming AML-CTF reforms, AUSTRAC's regulatory priorities, insights from the regulatory supervision team, including common compliance challenges observed across the sector and their future focus for supervision work, an update from our enforcement team, sharing insights into AUSTRAC's enforcement activity and how we respond to non-compliance, insights into how your transaction reports contribute to our intelligence findings, and a look at the 2024 compliance report data and how this may shape AUSTRAC priorities. Before I hand over to Hayley, I'd like you all to take a moment to really think about why you are here and what you would like to take away from this session. I encourage you, when you're listening to each speaker, to really think about whether your business is meeting AUSTRAC's expectations in these areas. If yes, are there areas you can further improve? And if your business isn't meeting AUSTRAC's expectations, what are you going to do when you go back to your business to improve your AML-CTF processes? To kick off today's session, we'll start with the brief update on the AML-CTF reforms, what it means for you, and what's coming next. To walk us through that, I'll hand over to Hayley.
Thank you, Nikki. As I'm sure you are all aware, AUSTRAC's anti-money laundering and counter-terrorism financing, otherwise known as AML-CTF, regime is undergoing reforms. These reforms are indicative of the Australian government's commitment to protecting the integrity of the Australian financial system and improving our AML-CTF regime. To this end, the AML-CTF Amendment Bill passed in November 2024, amending the AML-CTF Act and progressing the simplification and modernisation of the AML-CTF Act, regulation and rules. One key objective of the reforms is to expand regulation to tranche 2 entities. These include lawyers, accountants, trust and company service providers, dealers in precious metals and stones, and real estate professionals. Services provided by these sectors are recognised globally as high risk for exploitation, but are not captured under the current AML-CTF regime. For existing reporting entities such as yourselves, the reforms also aim to increase flexibility, reduce regulatory burden, and improve clarity by making key terms, obligations, and terminology more consistent across the AML-CTF Act and the rules. This simplified framework is designed to help you better understand your obligations and strengthen your ability to detect and prevent financial crime. The reforms also aim to modernise the regime so it remains fit for purpose in a rapidly changing financial environment. The reforms expand the risk-based approach, allowing flexibility as businesses continue to evolve. As part of this process, AML-CTF program requirements are set to change, moving away from ticker box compliance. The reforms will also better define the roles and responsibilities of a reporting entity's governing body and AML-CTF compliance officer, further supporting stronger oversight and suitability. The Financial Action Task Force, known as the FATF, is the global money laundering, terrorist and proliferation financing watchdog. Influenced by the FATF, global AML-CTF regulation is inherently risk-based. Their first recommendation is to identify, assess, and understand risk. Almost all AML-CTF obligations flow from this. As mentioned earlier, the updated requirements will place a much stronger emphasis on the need for meaningful, risk-based controls. One of the key changes is the introduction of proliferation financing. Proliferation financing is when a person makes an asset available, provides a financial service, or conducts a financial transaction that is intended to facilitate the proliferation of weapons of mass destruction, regardless of whether the activity occurs or is attempted. While some of you may have already been considering your proliferation financing risks, the reforms now expressly require this. It will now also be required that reporting entities assess their money laundering, terrorism financing, and proliferation financing risks as part of their AML-CTF program. While you may already be doing this in practice, this change formalizes that expectation and reinforces that your risk assessment must be the foundation of your AML-CTF compliance program. There are other structural changes to the AML-CTF program under the reforms, such as moving away from having a Part B and a Part A program, and a requirement for you to create and maintain appropriate AML-CTF policies to manage and mitigate the specific risks identified in your business. Beyond the content and structure of your AML-CTF program, the reforms also address practical elements, such as strengthening governance frameworks. The reforms will require you to have a governing body, senior management, and AML-CTF compliance officer, and the legislation will clearly define these roles. The governing body and senior management will be required to provide ongoing effective oversight of the business's AML-CTF compliance and risk management activities. And while the obligation to have an AML-CTF compliance officer is not new, the reforms place stronger emphasis on the suitability of individuals in these roles. This will mean that the person appointed to this role must meet specific fit and proper requirements to ensure they have the necessary expertise, integrity, and seniority to fulfill their responsibilities effectively. More information on the AML-CTF compliance officer will be determined through ongoing consultation on the rules. You may have also seen in the amendment bill that independent reviews or evaluations will be required to be conducted at least every 3 years. This does not mean that 3 years will be appropriate for all businesses. The frequency with which evaluations must be conducted must still be appropriate to the nature, size, and complexity of the business. The rules will also clarify the requirements around the conduct of independent reviews. Finally, a core objective of the reforms is ensuring obligations are clear and reflect contemporary business. This is particularly evident in a number of targeted changes covering obligations like customer due diligence, international value transfer service reports, value transfer chains, and tipping off. To summarise, you will have seen this clarity achieved in the reforms to the tipping off offence, which came into effect on 31 March this year. The changes now focus on whether disclosing information would or could reasonably be expected to prejudice an investigation. This new harm prevention approach shifts the focus from compliance to risk and reduces unintended compliance challenges or regulatory burden. There will also be changes to customer due diligence requirements to ensure a more targeted and flexible approach, focusing on outcomes that help mitigate risks associated with higher risk customers and transactions. The reforms clarify and simplify customer due diligence obligations, reinforcing that customer due diligence is an ongoing process. These changes will also clarify the level of checks applied to each customer initially and on an ongoing basis. They outline expectations around customer risk rating, initial customer due diligence, ongoing customer due diligence, and enhanced customer due diligence. International Value Transfer Service reports will replace the current International Funds Transfer Instruction reports, otherwise known as IFTIs. The reporting obligation will now lie with the reporting entity closest to the Australian customer, better reflecting how these businesses function in practice. These changes will come into effect on 31 March 2026. That brings us to the end of the reform update. For now, I'll hand over to Nikki, who will take us through AUSTRAC's current regulatory priorities and how they shape our engagement with industry. Thanks, Nikki.
Great, thank you, Hayley. Let's turn our focus now to AUSTRAC's current regulatory priorities. While the reforms provide insight into the future of the regime, our day-to-day work is guided by the risks and issues we're seeing across the reporting entity population now. These priorities shape how we engage with industry, where we focus our supervisory efforts, and how we support reporting entities to strengthen their compliance. In 2023, AUSTRAC published our regulatory priorities for the first time, outlining our focus areas for strengthening Australia's financial system's resilience to money laundering, terrorism financing, and other serious crime. These priorities are structured around 5 key themes. The first is our enduring priorities, which include core areas of compliance, such as AML-CTF programs, MLTF risk assessments, reporting obligations, and high-risk sectors. The second is an increased regulatory focus on emerging and high-growth sectors. This applies to digital currency exchange or virtual assets, payment platforms, bullion, and non-bank lenders and financiers. The third priority is serious and systemic deficiencies. This theme relates to compliance failures in key areas, including board and executive accountability, transaction monitoring programs, and the outsourcing of AML-CTF functions. AUSTRAC understands that many businesses choose to outsource certain AML-CTF functions to gain specialist expertise or manage costs. In September 2024, AUSTRAC released guidance on outsourcing AML-CTF functions to help reduce potential risks that may arise through outsourcing arrangements. The fourth priority is continuous improvement, which will modernise and improve Australia's AML-CTF regime. The Australian government has reiterated this through the legislative reforms. And finally, our fifth priority is partnerships, building and maturing strong relationships with a wide range of partners across industry, government, and law enforcement to support our regulatory objectives. These regulatory priorities aren't just high-level goals. They directly influence the way AUSTRAC approaches supervision, They help shape our engagement with industry, inform where we focused our attention, and guide how we assess and respond to compliance behaviours. To provide more insight into how these priorities have been implemented, I'll hand over to Emma, who will share some of the regulatory team's recent supervisory work, key observations, and areas of focus going forward.
Thanks, Nikki. I'm here today to provide you with an overview of the regulatory activities that have been recently conducted within your sector. I will also be sharing the common issues and main takeaways that were identified from these activities. Before finally I wrap up my session by going over some of the key areas the regulatory team will be focusing on over the next 12 months. Over the last year or so, the team has conducted multiple regulatory activities within your sector. These activities have included compliance assessments of both pubs and clubs across several states. And the team have also overseen the AML uplifts of a number of these venues following the conclusion of these assessments. Through these activities, they've observed that there is still significant work to be done in the pubs and clubs sector to improve both AML-CTF capability. One clear reflection of this is in that SMR reporting remains stubbornly low across the sector. To AUSTRAC, this indicates that there is still work to be done to uplift AML capacity and capability, including the ability to understand the money laundering risks to which your business is exposed. So I'm going to move now to sharing what the team has identified through their regulatory activities to date as key areas for improvement in the sector. As I share this information with you, I encourage you to consider the systems and controls you have in place and the actions you can take to ensure that you are meeting your AML obligations. So the first obligation I'm going to talk about is money laundering and terrorism financing risk assessments. These are quite simply both the starting point and foundational document for any compliant AML-CTF framework. It is our key observation that when businesses get this wrong, they set themselves up for failure. Across the pubs and clubs sector, one of the key observations from the team's assessments to date is that there is significant room for improvement in the quality of MLTF risk assessments in the pubs and clubs sector specifically. Unfortunately, when they go out and undertake their assessments, they have repeatedly found templates, set and forget risk assessments. This becomes clear when they go out to venues and ask questions about these documents, and it quickly becomes obvious that they were provided to the venue as a template that was not then tailored to the business, and as a result is not an accurate reflection of the risks that business actually faces. The regulatory team have also seen instances of these risk assessment documents not being properly understood by the venue staff. Not understanding and engaging with your risks exposes your venue to the risk of being exploited by criminals. And these risks not only pose a direct threat to the community, but also have wider security, economic and social impacts on Australians. Identifying and assessing the level of MLTF risk to your venue is an important first step from which you will then develop your AML-CTF program. So what are the main things an MLTF risk assessment must have to make sure you are meeting your AML obligations? Well, the first step is to make sure you identify the MLTF risks your venue might reasonably face. To do this, you must make sure your MLTF risk assessment is tailored to your venue, given no two venues are the same. There are a couple of good starting points for this. The first is to remember that both AUSTRAC's National Risk Assessment and NSW's CC's Project Islington have identified the main money laundering risk to which the pubs and clubs sector is exposed is customers spending the proceeds of crime to gamble on EGMs. EGMs provide criminals with a readily accessible opportunity to launder their funds quickly and at scale. Another good starting point when you are developing your MLTF risk assessment is to refer to AUSTRAC's Pubs and Clubs Guide on our website. This document steps you through how to undertake an MLTF risk assessment, including some of the questions you can ask to help identify your venue's MLTF risks. These include questions like, how many EGM entitlements does my venue have? What is the load-up limit for machines in my venue? What is my profit per machine? What kind of socio-economic area is my venue in? What kind of customers do I have? Can customers play EGMs anonymously at my venue, or do they have to insert a membership card? And does my venue have CRTs and TITO or TICO systems? What are the risks involved in these? When you are considering the risk posed by your customers specifically, one additional question. When you are considering the risk posed by your customers specifically, some additional questions include the differences in risk posed by customers that are members versus those that are non-members, socioeconomic factors such as low, medium and high income earners, one-off visitors such as tourists, customers that are high risk, for example, politically exposed persons, and if you have a tiered membership program, the money laundering risks of customers at different levels of that membership program. In terms of customer behaviours, you should consider known money laundering typologies, such as customers purchasing or selling winning tickets with other customers. When considering these typologies, AUSTRAC expects that you also keep up to date with published MLTF typologies and trends. And you can find indicators of suspicious activity for the pubs and clubs sector on our website. So once you have identified the risks to which your venue is exposed, then you need to assess these. For example, are these risks at your venue low, medium or high risk? And then think about the systems and controls you can put in place to mitigate and manage those risks. So to give you an example, you might identify that one risk to which your business is exposed is that customers buying and selling winning tickets, and given how many times this has occurred at your venue, you might assess this as posing a high MLTF risk. Given this, you then need to think about the systems and controls you need to put in place to identify, mitigate and manage this activity, and list these in your MLTF risk assessment. So for example, you might list measures such as ensuring staff are regularly trained to identify this behaviour, putting in place measures to educate customers that this behaviour will not be tolerated in your venue, and ensuring that you have procedures in place in certain circumstances for CCTV to be reviewed to check the origin of a ticket before paying a customer out. This list is not exhaustive, but is just some of the examples you might like to consider. As you can see from this example, assessing the MLTF risk your venue faces in this way enables you to develop systems and controls to protect your business from being exploited by criminals. The regulatory team has also observed that pubs and clubs often have a high risk appetite or tolerance to retain customers despite observing repeated money laundering behaviour or ongoing risks. The second key area for improvement I want to share with you today relates to AML-CTF programs. So once you've undertaken an MLTF risk assessment, you must then develop an AML-CTF program. This program sets out the policies and procedures you have in place to meet your AML-CTF obligations. And this should be a written document that is actually used and followed by your venue to meet its obligations. As with your MLTF risk assessment, a program that is not effective leaves your venue exposed to exploitation, which has impacts on your customers and the broader community. Unfortunately, in their work, the regulatory team have observed many instances of deficient or non-compliant AML-CTF programs. And examples of this include programs that were not tailored to the venue. For example, they have seen programs that contain a transaction monitoring program that was not actually in place at that venue. Also, programs that were not followed in practice by the venue. Programs that repeatedly use vague language, such as may undertake or could be applied, which makes it very difficult for staff to follow. And venues with grossly under-resourced AML-CTF functions. As with MLTF risk assessments, there is no one-size-fits-all AML-CTF program. Each reporting entity is different and has its own unique set of money laundering, terrorism financing risks. So you must ensure your program is tailored to meet your venue's specific needs, risks, and characteristics. This gives you the flexibility to decide how to meet your obligations and to develop stronger and/or additional controls where necessary. As I mentioned a moment ago, there are a number of common themes the regulatory team have seen in programs they have assessed. One is policies and procedures that are listed in your program that are not actually followed by the venue. The AML-CTF Act requires you to comply with your program once you have adopted it. So simply listing a series of generic procedures provided to you in a template program not only means that your venue is likely not meeting its obligations to identify, mitigate and manage your risk, but it also exposes you to the risk of AUSTRAC coming to your venue and finding that you are not complying with your program. Another common theme seen in assessments is the use of generic wording in programs, such as may undertake or could be applied. This language is not specific enough to show AUSTRAC how you're meeting your obligations, and also can cause confusion for staff when they come to apply the controls listed in your program. For example, we see programs that say you could do this or you could do that, but do not actually say when something must be undertaken. AUSTRAC expects that your program clearly documents the processes and procedures that staff should follow and when. There are resources available on our website to help you understand your obligations and develop your AML CTF program. This includes the Pubs and Clubs guide on our website that I mentioned earlier. The next area for improvement is transaction monitoring programs and enhanced customer due diligence programs. So firstly, transaction monitoring programs are an integral component to your ability to effectively meet your AML CTF obligations. Your business must have an appropriate risk-based transaction monitoring program to help your employees identify suspicious behaviours and transactions, and to take steps to protect your business and customers. Your TMP should involve both staff observation and other transaction monitoring to monitor for those things your staff cannot see. What transactions you monitor and how and when you do this should be based on the risks you have identified in your MLTF risk assessment. When these transactions occur, they should trigger transaction monitoring alerts, which must be reviewed by your staff. The sorts of things you are looking for in your transaction monitoring include the size, frequency, or patterns of transactions that may indicate unusual or suspicious activity at your venue, activities that may be inconsistent with what you know about your customer, their history at your venue, and their risk profile, and any other unexpected activity from a customer which may indicate MLTF in your business. You should then have clear and documented processes in your AML CTF program to ensure that there is a consistent and structured approach to the review of any alerts triggered by your TMP for these sorts of transactions. You must also ensure you allocate sufficient staff resources to review these alerts. Your TMP should also be regularly reviewed and updated when a new risk emerges. In terms of the regulatory team's observations from their work in the pubs and clubs sector, they have identified transaction monitoring as another area in which there is significant room for improvement. Unfortunately, they continue to see highly manual transaction monitoring programs in venues where this is likely not appropriate, given the particular venue's nature, size, and complexity. And by highly manual, I mean instances of TMP that solely consist of monitoring the venue's check register and staff observation. In many instances, this is unlikely to be sufficient to detect each of the money laundering risks to which many venues are exposed. And this is also likely to contribute significantly to the low SMR reporting volumes noted across the pubs and clubs sector, which I will discuss further shortly. So in terms of ECDD, as a quick refresher, you are required to undertake enhanced customer due diligence when a number of circumstances arise, including when you determine there is a high risk or where you have formed a suspicion relevant to submitting an SMR to AUSTRAC. You are then required to undertake ECDD, and this involves undertaking a range of measures, so more than one, that are appropriate to the money laundering and terrorism financing risk you have identified. Your AML CTF program must contain an ECDD program that sets out the circumstances in which you will undertake ECDD and the measures you will undertake. As I said earlier, the measures you undertake must be appropriate to the risk you have identified. And to illustrate this, I will give you a relatively straightforward example. If you identify a customer who you suspect is unemployed and is gambling large amounts of money, then what you have identified is a source of funds, source of wealth risk, including that they may be gambling with the proceeds of crime. So you need to undertake ECDD appropriate to that risk to understand how the customer is funding their level of play. Instead, what we have seen in our work is that venues, instead of undertaking ECDD appropriate to that risk, venues are instead taking a one-size-fits-all approach to ECDD, such as asking the customer to provide their identification again or just reviewing the customer's play. Undertaking ECDD in this manner then helps you to determine whether a customer or their behaviour is suspicious or too high a risk, which can help you decide whether to continue to do business with them. ECDD also allows you to decide whether a suspicious matter should be reported to AUSTRAC. The next area for improvement relates to suspicious matter reports, or SMRs, and venue staff recognising suspicious behaviour. As I mentioned earlier, SMR reporting remains an area requiring significant uplift in the pubs and clubs sector. Currently, the number of SMRs being reported across the sector is low, and it is the regulatory team's observation that the SMRs that are reported are largely of low quality. These observations around SMR reporting in the pubs and clubs sector have also been specifically called out by AUSTRAC in the National Risk Assessment I mentioned earlier. From their work in the sector, the regulatory team think the reasons for this are many and varied, including that where capability and capacity is low in areas such as money laundering and terrorism financing risk assessments and TMPs, this is where SMR numbers usually suffer as a result. However, the regulatory team have also heard other views, including that businesses may be reluctant to report SMRs because reporting that there is a money laundering risk present in your business might make you a bigger target for AUSTRAC attention. So I want to assure you that we actually view quality, timely SMR reporting as an indicator of a compliant AML framework. So to start with a quick refresher on when an SMR is required before moving on to what good quality SMR reporting looks like in the pubs and clubs sector, you must submit an SMR to AUSTRAC whenever you suspect on reasonable grounds that a customer or their agent is not who they claim to be, or the designated service relates to terrorism financing, money laundering, tax evasion, proceeds of crime, or an offence against a Commonwealth, state, or territory law. Reasonable grounds means that after considering all the information and circumstances available, a reasonable person would conclude that there is a relevant suspicion and an SMR should be submitted. Timing is critical with SMRs. You must submit an SMR to AUSTRAC within 24 hours if the suspicion is related to terrorism financing, or within 3 business days if the suspicion is related to other matters such as money laundering. It is important to remember that there is no dollar value or threshold for SMRs. You can also report a suspicious matter even when no transaction has taken place. For example, if a customer is acting suspiciously and approaches another customer asking to purchase their tickets. To help you meet your SMR obligations, AUSTRAC publishes indicators of suspicious activity to assist you and your staff to identify suspicious activity in your venue. I encourage you to have a good look at these and ensure that you are able to identify those indicators that are relevant to your venue. You should also make sure that your staff AML CTF training includes training on how to identify suspicious behaviour. I note that AUSTRAC has posters you can display in staff areas that provide examples of suspicious behaviour in venues. So what does quality SMR reporting look like? Well, first of all, reports on a wide range of risks to which your venue is exposed. One concern observed in this sector is venues only submitting SMRs following an external event such as adverse media or a law enforcement or regulatory notice. This is not to say that it might not be appropriate to submit an SMR when either of those events occurs. However, we are concerned when we only see SMRs submitted following these type of events, or if we only see SMR reporting on a single money laundering risk. Overall, I would encourage you to see SMR reporting as your opportunity to showcase to AUSTRAC the effectiveness of your AML function. The next area of improvement I'd like to discuss is AML CTF staff training and under-resourced AML CTF functions in venues. A common theme observed by the regulatory team is under-resourcing of AML CTF functions and deficiencies in venues' AML CTF risk awareness training for staff. For example, the regulatory team have found instances of risk awareness training not being aligned to the risks that the venue actually faces. They have also observed venues that rely solely on AML CTF training provided by totalisers. This is not adequate, as this does not appropriately train staff to recognise the risks to which this sector is exposed, particularly those relating to EGMs. If you have totalisers located in your venue, your staff should also receive AML CTF training separate to what they provide. I would like to quickly turn to the resourcing of your AML function. Unfortunately, under-resourced AML functions is an issue we have observed across the pubs and clubs sector. You must ensure you have an appropriately resourced AML function, which includes having adequate staff training to review transaction monitoring alerts, undertake ECDD, report SMRs, as well as ensuring you have enough staff on the gaming floor to identify suspicious behaviour. Properly resourcing your AML-CTF function also includes having an AML-CTF compliance officer who has the appropriate seniority and access to implement your AML-CTF program effectively. And finally, I would like to touch on independent reviews as an area requiring uplift in the sector. The requirement to undertake independent review is an important obligation, as it is intended as a second set of eyes looking over your AML framework. Unfortunately, again, it is the regulatory team's observation that the quality of much of the independent review across the pubs and clubs sector requires significant improvement. As part of this, AUSTRAC is continuing to actively engage with and educate external advisors providing services to the pubs and clubs sector. I would like to take this opportunity, however, to remind the pubs and clubs sector that it is the responsibility of the venue to ensure that the independent review you obtain complies with the requirements of AML-CTF legislation. The independent reviews the regulatory team have observed appear to be a ticker box exercise, including self-assessment templates. The regulatory team also noticed an absence of an appropriate review of whether venues' AML-CTF programs were effective, compliant, and appropriately tailored to the venue. So some of the things I would look out for when selecting an appropriate independent reviewer would be to ensure that they will be thorough. Make sure they really seek to engage with your business and have a close look at how you operate. Make sure they look at how effective your AML framework is. And make sure you select an independent reviewer that can actually be independent. I would also encourage you to seek fresh, questioning eyes to run over your AML-CTF program, rather than repeatedly using the same reviewer again and again. The AUSTRAC website has more information on independent reviews, including who can conduct one, examples of circumstances that quantify frequent reviews, and other explanatory notes. We hope that by sharing these observations with you today, we have helped you to better understand your obligations and what you need to do to meet AUSTRAC's expectations. We understand you're all part of a busy, demanding industry, which, like other businesses in the gambling sector, has a number of regulations with which you must comply. Although this is challenging, you must meet your AML-CTF obligations to protect your business, your customers, and the Australian community. Looking ahead, AUSTRAC's regulatory supervision teams will continue to focus on ensuring reporting entities across all sectors maintain risk-based and fit-for-purpose AML-CTF programs, monitoring how businesses are adapting their programs to respond to changes in their products, services, customer base, or risk environment, supporting improvements in the quality and relevance of MLTF risk assessments, assessing the effectiveness of transaction monitoring programs and the ability of entities to detect and respond to unusual or suspicious activity, and reviewing how entities apply enhanced customer due diligence measures and manage higher risk relationships and transactions. We will also maintain a strong focus on entities' governance and oversight arrangements, particularly the role of boards, senior management, and AML-CTF compliance officers in ensuring programs are properly maintained and adapted to emerging risks. AUSTRAC's approach remains risk-based, intelligence-led, and outcomes-focused. We encourage all reporting entities to take a proactive approach to compliance, review systems and controls regularly, and ensure they are fit for purpose in a rapidly evolving risk environment. By maintaining strong AML-CTF programs and engaging openly with AUSTRAC, you contribute directly to safeguarding Australia's financial system and protecting the broader community. I hope this has given you a clearer sense of the key themes we're seeing across the reporting entity population and how AUSTRAC is working with industry to strengthen compliance outcomes. I'll now hand back to Nikki to continue with today's session.
Thank you, Emma, for that overview of AUSTRAC's recent supervisory work and the practical insights you shared. While supervision plays a key role in helping reporting entities strengthen their compliance, there are times when more serious or systemic issues require a stronger response. With that in mind, we'll now hear from Isabella, who will provide an update on AUSTRAC's enforcement activity, key themes we're seeing in non-compliance matters, and what to expect going forward.
Thanks, Nikki. If reporting entities do not meet their obligations under AML-CTF law, AUSTRAC can take steps to compel their compliance and/or seek a penalty. Enforcement actions are specific legal actions we can take to make sure reporting entities comply with the law. Enforcement actions available to AUSTRAC are civil penalty orders, enforceable undertakings, infringement notices, and remedial directions. Another type of action AUSTRAC can take is to issue a written notice requiring a reporting entity to appoint an external auditor to review their MLTF risk management or AML-CTF compliance, or undertake an MLTF risk assessment. We can also refuse, cancel, or suspend the registration of remittance service providers and digital currency exchange providers if they pose an unacceptable risk of money laundering, terrorism financing, or other serious crime. AUSTRAC very recently refused to renew a crypto ATM operator's registration and placed operating conditions, including transaction limits, on other Australian crypto ATM providers. Over the past year, AUSTRAC has continued to use its full range of regulatory tools, including enforcement powers where necessary, to respond to non-compliance and uphold public confidence in Australia's financial system. While we like to be transparent about our enforcement outcomes, it's important to note that not all investigations have progressed to the point of public outcome. So today I'll only speak to matters that are already in the public domain. We recognise that threats are evolving and controls won't always catch everything, but compliance failures in the AML-CTF regime can contribute to significant real-world harm, and where harm has occurred or where the risk of harm has been materially increased by the failures, reporting entities should expect AUSTRAC to act accordingly. Recently, AUSTRAC undertook significant enforcement action against several entities for failing to comply with their obligations under the AML-CTF Act. One of the more prominent matters involved a casino operator, where enforcement action led to a substantial civil penalty. A casino operator was found to have failed to meet customer due diligence requirements and had systemic weaknesses in its risk management and controls. As a result, the federal court ordered the casino operator to pay a substantial penalty. The decision was based on findings of serious breaches of the AML-CTF Act, particularly around ongoing customer due diligence and systemic control failures. These weaknesses allowed high-risk customers to move large sums of money through the casino's operations over several years, obscuring the origin and ownership of these funds. The casino operator also provided services through high-risk channels and to high-risk customers without implementing necessary risk-based controls. As a result, they failed to conduct required checks on a significant number of customers, including individuals known to law enforcement or presenting indicators of potential money laundering risk. This outcome highlights the importance of establishing and maintaining a robust risk-based AML-CTF program, not just to avoid substantial penalties, but to protect the integrity of your operations and reputation over the long term. Looking ahead, serious and systemic non-compliance, particularly regarding foundational obligations such as risk-based customer due diligence, will remain a focus of AUSTRAC's enforcement work. In an environment of evolving threats, we recognise that some degree of failure is inevitable. Controls won't always hold up, and we accept that. But we're still seeing, in too many cases, basic obligations not carried out effectively or at all, and unpersuasive proof that the business is taking reasonable steps to reach compliance. It's important to remember, AML-CTF is not a set and forget regime. You need to ask, how does MLTF risk actually play out in your business? Where are the real vulnerabilities? How are you monitoring whether your controls are working? And what happens when they're not? Again, the AML-CTF regime is not designed to eliminate all financial crime. It's about taking reasonable, evidence-based measures to identify, manage, and mitigate risk. That means you need to explore a tailored and proactive approach. There is no one-size-fits-all solution. While we recognise that occasional failures may occur, it is critical that when these issues are identified, they're addressed promptly. Open, proactive communication with AUSTRAC, particularly where significant compliance concerns arise, is the most effective way to mitigate broader consequences. We saw this approach in practice recently when AUSTRAC accepted an enforceable undertaking from a corporate bookmaker following an extensive supervisory assessment. The corporate bookmaker demonstrated willingness to cooperate and proactively address its obligations. Therefore, AUSTRAC determined that accepting an enforceable undertaking from the corporate bookmaker was the most appropriate regulatory response. This matter highlights the importance of collaboration, transparency, and early action in supporting compliance outcomes. In contrast, a culture which encourages avoidance or compliance window dressing will also be a focus of AUSTRAC's enforcement work. By proactively engaging with AUSTRAC and strengthening your compliance frameworks, you directly contribute to safeguarding Australia's financial environment. That brings us to the end of the enforcement update. While the nature of my day-to-day work means that some things do not end up in the broader public forum, I hope this has provided some useful insights into our enforcement focus and the importance of maintaining risk-based controls. With that, I'll hand back to Nikki to continue with today's session.
Thanks, Isabella, for that update. It's a strong reminder that while AUSTRAC understands the challenges of managing financial crime risk, there's a clear expectation that reporting entities are actively identifying, addressing, and learning from gaps in their programs. We're now going to shift our focus by taking a step back and looking at the bigger picture through the lens of AUSTRAC intelligence insights. This is where we start to see the why behind the AML-CTF regime, how criminal threats are emerging and evolving, the sectors being targets, and the behaviours that create vulnerabilities. Hayley will now take us through this. Thanks, Hayley.
Thanks, Nikki. Today you've heard about your AML-CTF obligations and the weaknesses observed by our supervision and enforcement teams. You've also heard about AUSTRAC's expectations. So why does this all matter? As a reporting entity, you are the front line in combating financial crime and you know your customers best. So you're best placed to recognise potentially suspicious behaviour or activity and report it to us. Each year, billions of dollars in illicit funds are generated from illegal activities such as drug trafficking, tax evasion, cybercrime, and other illegal and corrupt practices. As criminals seek to exploit vulnerabilities within the financial system to disguise illicit funds and enable serious criminal activity, AUSTRAC's dual role as AML-CTF regulator and financial intelligence unit helps to build resilience in the financial system and allows us to use financial intelligence and regulation to disrupt these activities. The reports that you submit make a real difference in detecting, deterring, and disrupting criminal and terrorist activities. We analyse the reports you submit using sophisticated modelling and predictive analysis tools, cross-referencing them with reports other entities submit, as well as our own intelligence holdings, to find patterns of criminal activity, including money laundering and terrorism financing. We share this information to help our partners in Australia and overseas to investigate and fight crime. It's your information that can help launch an investigation, solve a crime, or link criminals not previously known, helping to protect the wider community. Advancements in technology allow people to do business and move money around the world more quickly and easily. But it also creates opportunities for criminals who are constantly looking for ways to take advantage of the global financial system. Almost all serious crime types have a financial component, such as financial transaction. As such, financial transaction data analysis can assist in identifying relationships between individuals and networks, the movement of funds, and patterns of activity or behaviours. From our dual regulatory and financial intelligence perspectives, the work we do has a significant impact in disrupting serious and organised crime. I will now share a case study to help paint a clearer picture on how reports submitted by reporting entities, like yourselves, provided intelligence that directly aided a criminal investigation. Our information was used by a law enforcement agency, which led to several cases of identity fraud being uncovered. A lost wallet was discovered at a fast food outlet, which contained numerous forms of identification, all featuring different names but bearing the photograph of the same individual. Investigating officers established that the suspect maintained several false identities, while the suspect's wife possessed a false driver's license. It was established that the suspect had been using the names of real people to create his false identities. Our information included 7 suspicious matter reports, or SMRs, submitted by reporting entities. 6 of the SMRs detailed the suspect's suspicious behaviour at gambling venues, including cashing out a total of 89,000 Australian dollars in structured amounts below the $10,000 cash transaction threshold, and a reluctance to provide identification at gambling venues. The SMRs also indicated that the suspect had used some of his various aliases to conduct these activities. Our information also showed that over a 1-year period, the suspect had made a number of significant cash withdrawals from a bank account totaling 620,000 Australian dollars. During the same period, the suspect sent a number of international fund transfer instructions, primarily to India and China, which totaled 103,000 Australian dollars. The suspect was ultimately charged with identity fraud. This case highlights the crucial role that reporting entities play in supporting intelligence outcomes and keeping our community safe from criminal abuse. Back to you, Nikki.
Great, thanks so much, Hayley. Finally, I'd like to take the opportunity to give you a brief overview of our initial insights from the 2024 compliance report data. As reporting entities, most of you are required to submit a compliance report to AUSTRAC each year, answering questions about how you have met your AML-CTF obligations. The information gathered from the compliance report provides key data inputs for our risk modelling of reporting entities and sectors as a whole. It helps us understand how you are tracking with your obligations, where there are areas of strength, and where some gaps may still remain. It also helps inform how we define our regulatory priorities and tailor our engagement and support going forward. As many of you will know, the reporting period for the 2024 compliance report only just closed on the 31st of March this year, so we are still deep in the analysis. However, a few early trends have already emerged, and they align closely with the themes we've touched on today. To begin with, it's worth noting a positive outcome from the 2024 compliance report period, with 84% of reporting entities who have the compliance report obligation to complete their 2024 compliance report, and that is up from 82% last year. It's encouraging to see an increase in engagement across the population. As mentioned, the data you provide gives us vital insights into how the regime is working, helping us shape guidance, identify gaps, and tailor our support where it's most needed. Ultimately, the more complete and accurate data we receive, the better placed we are to help you meet your obligations and protect your business from risk. Moving on to risk assessments now. While it's encouraging to see that 77% of pubs and clubs reviewed or updated their MLTF risk assessment in 2024, only 8% of them indicated they did so in response to AUSTRAC engagement, guidance, or feedback. While we acknowledge that not every AUSTRAC engagement will require a full reassessment of your risk profile, this number suggests that many entities may be missing opportunities to adapt their programs in response to regulatory or environmental change. For example, AUSTRAC published national risk assessments on money laundering and terrorism financing this past year. These risk assessments should be used by entities to review and update their risk assessments. AUSTRAC presented sector-specific webinars to communicate the findings of these risk assessments at the time, and you can find recording of these sessions on our AUSTRAC YouTube channel. As you will recall from earlier, ECDD, also known as Enhanced Customer Due Diligence, is required in a range of high-risk scenarios. However, we continue to see evidence of inconsistent application of ECDD controls, particularly around senior management oversight. Of the 75% of pubs and clubs that reported to conduct ECDD in 2024, only 24% sought senior management approval to provide a designated service, and only 28% sought senior manager approval to continue with a high-risk customer relationship. These figures suggest that escalation protocols may not be working effectively, or that decision-making is not being documented in line with entities' obligations. When it comes to reporting obligations, we know that timely, accurate reports are one of the most valuable contributions entities can make to the broader AML-CTF regime. However, compliance report responses continue to show variability in how these obligations are being met, particularly around the systems and controls that support detection and escalation. This has a flow-on effect to the governance and oversight of your frameworks. For example, only 1% of pubs and clubs that confirmed that they provide reporting to their board or senior management on the performance of their outsourced function. Given that outsourcing is relatively common, with 58% of pubs and clubs stating that they outsource one or more of their compliance functions, this highlights the need for stronger governance around outsourced arrangements. To ensure oversight and accountability, it must remain in-house. Finally, let's talk about transaction monitoring. The data currently shows that of the reporting entities that indicated they detected suspicious activity, 50% did so via staff, while 37% identified it through their transaction monitoring program. This alone tells us there's room to improve program effectiveness. But what's particularly important to highlight is entities that reviewed their TMP in the past year were more than twice as likely to detect suspicious activity, with 48% of those who had reviewed their TMP making a detection, compared to just 22% of those who had not. This reinforces a critical point. Much like your AML-CTF program as a whole, your transaction monitoring program is not set and forget. Ongoing tuning, testing, and adaptation are essential to ensuring that TMPs remain aligned with your risk profile and capable of detecting suspicious activity in real time. Altogether, these insights help us see where improvement is happening and where there's still work to do. And the data reflects many of the themes we spoke about earlier. The need for tailored risk assessments, consistent application of customer due diligence, clear governance, and effective systems and controls. We will continue to use this data to inform our regulatory focus and support activities, and we encourage you to reflect on how these insights might apply to your own program and practices. This brings us to the end of today's forum. Thank you all once again for joining us today, and we hope you found this session valuable. Bye for now.